Hello and welcome to FinTechTalk. I'm your host, Charles Orton-Jones. Today we're looking at the balance between innovation and compliance. One of the great things about working in FinTech is the profusion of incredible startups. I believe there are 9,000 FinTechs in the world currently. We have incredible progress being made in new fields such as buy now, pay later. We're all familiar with Klarna, Zilch, and so forth. We see Lemonade in the United States in the insurtech industry, producing payouts in 3 seconds using AI. But there's always a balance. You innovate too fast, you risk invoking the wrath of the regulator. So what's the balance? Is there a formula? How do banks see it? Our promise to you always at FinTech Talk is to bring you the leading experts from around the world. That's what we're doing today. We've got two wonderful guests who I will now introduce. So let me unveil Yemi Olusegun. Yemi is the founder of the Change Hive, one of the world's leading consultancies to banks and fintechs. It's her job to help them implement innovation programs. Yemi, lovely to talk to you. Where in the world are you talking to us from today?
It's my delight to be here, Charles. Thank you for that warm introduction. I'm talking from London.
Fantastic. And our second guest is calling in from Johannesburg. We have Nomzamo Mazia. She is Head of Strategy and Research Compliance at ABSA, which is one of South Africa's biggest banks. It is present in 10 major African nations. It's a huge organization. So it's wonderful to have Nomzamo here. Nomzamo, how are you?
I'm well, and yourself? And I'm currently coming from Johannesburg, sunny South Africa.
My background is big financial services organizations. So my background was JP Morgan, Barclays, and I've slowly moved more into the fintech space. Personally, I'm finding that in the fintech space, there's a lot of fast growth, fast transformation, and having to keep up with all that regulation has been a bit of a challenge. So I wonder, from your perspective as a regulator, what kind of regulations you're seeing being introduced and how you guys are managing it on your end?
Sure. It's so interesting that you kind of reflect on your own experience. I actually started the other way around. I started in fintechs and neobanks, and now I've moved into a large banking institution. So I've gone from very agile to, quite hard and fast rules. So I think it's interesting, and I think our topic today is very interesting, where kind of compliance meets innovation and the cadence. Right? The cadence is very different in fintechs versus larger institutions.
Same here. So Charles, you got two reverse people, right? I started from big bank to fintech, and Nomzamo's done the reverse. So
it's the perfect combination. So Nomzamo, tell me, as part of a big bank that has the duty to be responsible and work with regulators, what's the pressure like to innovate? Because you've got these fintech companies who are hoping to eat your lunch, as the expression used to be. So what's the pressure like internally to innovate, maybe faster than you're comfortable with?
So that's a very interesting kind of question. Coming from a compliance point of view, our first kind of knee-jerk reaction is always to protect the license, right? To make sure that we safeguard, the license. And that means we're slightly more risk averse. Whereas our business is having to compete with neobanks, fintechs, the likes, disruptors in the space. So they're feeling it from a revenue point of view. So they're kind of being pulled in a certain way. So we almost taking the stance of being actually an advocate for our business with our regulators and trying to take the regulator along board. And it's a very interesting task because you can imagine that regulators have a larger kind of mandate to regulate the entire kind of financial system. So I totally understand why their cadence is a lot slower. But it is very interesting because we have to balance business, whereas also our operating license.
Do you feel the rules are different for banks and fintechs? Because ABSA cannot screw up. You guys have a phenomenal reputation. Any little glitch, any oversight is going to be reported. Customers are going to talk about it. Whereas if one is working with a fintech, you kind of expect the odd, I'm not going to say outage, but the odd problem. And therefore, people are more forgiving of them. Do you feel that's the case?
I definitely think that's an ongoing kind of perception in the market. I spoke about my experience earlier, actually coming from a neobank. And actually, when we started out, we looked at how do we arbitrage the system, right? That was kind of our ongoing hypothesis. And the conversations that we had with our regulators, because they wanted to, create a more inclusive kind of banking environment, is totally different to the kind of conversation where you're having with somebody who's considered to be kind of a pillar of the financial system. So I think the conversation is definitely very different. The regulator is trying to level the kind of playing fields. So in that regard, it's understandable why they have a different level of conversation with fintechs who are wanting to enter the space.
Yeah, see, I think that's interesting, but I don't always think like we're always as diametrically opposed as sometimes that it's made out to be. Because, for example, in Europe, we had the open banking regulation, and that was a catalyst for a lot of innovation that we then saw. So PSD2 was introduced, and it meant that most banks had to open up their APIs and allow you to have an aggregated view of all your banking accounts. And that meant you then had all this comparison fintechs that were then kicked off the back of that regulation. I think that's a fantastic example of where we've seen regulation actually catalyze innovation. So I feel like sometimes it's not always as frictional
as binary.
Exactly as it's made out to be.
Definitely.
Yemi, can I ask you about that, about buy now, pay later, because that's a field where innovation absolutely leapt ahead of regulators, and the regulators, certainly in the United Kingdom.
Yeah, absolutely. I think buy now, pay later is a very interesting one. It started off as quite harmless, and it was very much introduced in this it's almost gamified. It gamified access to credit, and it meant that a lot of young people were getting into debt without being aware that what they were getting into was debt. And it was debt for sometimes quite irrelevant type purchases. Like, it wasn't for substantial things that you could then show forth and say, oh, I got into debt, but here was the outcome of the debt that I got into. So at least I have debt, but it paid off in the long term. So yes, regulation has lagged behind on buy now, pay later, but we're now starting to see a lot more regulation being introduced. People are now being made more aware that buy now, pay later is a credit product. Even though you don't have to go through credit checks before you are eligible for the product, it still needs to be regulated as such. We haven't seen as it hasn't really fully come into force yet, but there's a lot more talk around it, and people are being educated. And I think at least that's a start. It's going in the right direction. We haven't seen the full regulation yet, but I'm hoping it will come soon. But at least there's a lot more awareness that it is credit and it should be handled and marketed responsibly. So yes, in fairness, yes, it wasn't responsibly marketed initially, but it's slowly changing.
Yeah, definitely. I would say, actually, on your comment, a lot of kind of the innovation in our space, it's normally product innovation, which kind of pushes regulatory kind of posture change. So for us, it's normally we see kind of products being introduced by non-regulated entities, which then force almost the regulation to change for regulated entities. Buy now, pay later is a prime example in our environment. It's only through kind of the disruptors in the space and the fintechs which introduced the product, which then kind of saw lighter regulation on lending in our space. I was interested in your comment around open banking, right? You said that it hasn't been fully scaled. Do you think that's a case of regulation being almost the hindrance there? Or do you think it's more the environment, the ecosystem not being ready for it fully as it relates to digital transformation?
No, I think it has been scaled. I think I'm saying the regulation opened up, gave way for more innovation, right? Because PSD2 was introduced, banks were forced to comply and open up and allow open banking to happen. And because of that, you then had this new fintechs being launched off the back of the regulation. So it was, for me, a perfect example of where regulation for the first time was a catalyst, because usually you tend to see regulation being the hindrance or the cap. It's like, oh, we're all happy until regulation came and capped it and killed the growth. But actually, in that case, regulation actually was the catalyst to increase growth. Wow. So, yeah.
So I think, just to let the audience know, we're having some glitches and some problems with Charles's connection. So I'm just going to step in for Charles and try and do my best to fill in his shoes. So I'm going to go based off the discussion points that we have. So you talked about if regulation is a hindrance or catalyst for innovation, and especially with digital transformation. So maybe if you want to give some examples in real life where regulation has been a catalyst or a hindrance, in regards to any, especially you, Yemi, who works on digital transformations for companies, maybe like just give an example without mentioning any names where you've had problems with regulations when doing these programs and these transformation programs.
I think any kind of innovation is first of all revolting before it becomes revolutionary, and we all kind of jump on board and adapt. The challenge is making sure you don't adopt it too late in the game when you find that you're now a laggard, and then you end up as a Canon or or a Nokia, and you lost the whole momentum. And I think we also have to recognize that we're not operating in silos. It is one thing that COVID did for us. It helped us realize that me being in the UK doesn't mean I can't do business in the US right now. So if I find the UK market is too regulated for me, I can jump ship. I can still be in the UK physically, but decide to do business elsewhere where it's less regulated. And I think the fact that governments are aware of this means that they're a lot more careful with the kind of regulations that because they realize that people can just jump ship, right? We saw that with arms holding. So arms holding, the UK government tried so hard to get them to list in the UK, but even though they're still based here, they chose to go list in the US and in the US instead of the NASDAQ because it was a bigger market. And that's the kind of, I suppose, factors that are now being considered when regulations are being launched these days. So in terms of, I suppose, regulations that have been a catalyst, I think we talked quite extensively about open banking just now. I thought that was a great catalyst because it really took away a lot of the monopolies. So, you have the big four banks, the big banks in the UK, because you now have open banking is not as intimidating to compete with them as much, as you can now see like the rates they're offering you, how does it compare, and help customers get the best deal for their money. And in terms of, I suppose, the kind of threats that we're seeing, I think it's primarily a lot of noise coming up around like of cryptocurrency, Web3, and AI, those technologies. I think particularly concerning is this AI point. The UK is going to release a draft paper for AI end of next month. Apparently 100 million has been drafted to us, like educating regulators and getting them ready to come up with some regulational frameworks around AI. I think it's important that we all pay attention to it because it's all very nascent right now. I know it may feel like we're talking about for a long time, but AI is very much data-based. And the challenge for us is corrupt data goes in, corrupt data comes out, right? It's very easy right now to have a lot of bias going into AI. So it's how do we make sure that in all this AI engine and all this AI noise that's happening, that we're training it with the right data and that regulation is being framed in a way that it also still allows room for innovation. Because my point earlier, we're not operating in silos. If the UK government is overly regulated, it will kill innovation here, and people will probably just jump ship and go off to the UK, and it will kill the economy long term. So I think that's the conflict that I'm seeing from my perspective. Lindina.
Yeah, I mean, Nomzama, you mentioned that you're from a banking background, so I'm assuming in banking, because I know banks still have some legacy systems, some do still work in silos. They're not as easy to transfer information from one department to another department. So is your experience different in that end, or are you much of more what Yemi said?
So you're completely right. I think that traditional incumbent banks and large institutions still struggle with silos, which is why digital transformation for banks has been so hard. You hear the notion of data is the new currency, right? I think that for us, and especially South Africa, first of all, we're trying to solve an access problem with banking, right? Now that we've got 85% of our population banked, it's now about how do we create personalized banking, right? And that really speaks to data. And for us to really scale that, you're completely right. It's about breaking kind of the silos. It's also about, what certain regulators will allow. So, for example, we might want to leverage AI, but as you know, we mentioned that AI in itself, for a lot of regulators, is a black box. One thing they want to be able to do is to be able to have some form of assurance, to be able to govern it for transparency, to really understand some of the biases that go into some of these models. And that in itself is very hard to govern. So coming from a compliance point of view, you almost have to put a framework together of how do you think about AI models, right? And how do you think about ethical AI governance, which I think is something that, if I'm being honest, in our jurisdiction, we haven't come to terms with, and it seems like the world is grappling with, right? So from that perspective, definitely. I think the other thing is when we think about, especially in our jurisdiction, we're not just operating in silos inside of our bank. We're also operating in silos as an industry. Yemi mentioned open banking. That means you have to almost break from the silo mentality and think about how you kind of incorporate APIs into the whole ecosystem. So I think there's an entire kind of almost revolution that's happening in the banking industry, where we kind of less segregated, and we're kind of thinking about integrated solutions and AI and the likes.
Charles, do we have you back, or?
We do.
Okay, so I'm going to pass the baton back to you, Charles.
I'm having a glitchy time, but no, Yemi, I'm really interested in how you see the adoption of AI. We have, generative AI. We have so many different streams of AI, and I'm just wondering whether the people you talk to understand what they're talking about when they talk about AI, but also do they understand the risks? I mean, you work with organizations. How much do you think banking people are prepared to push the envelope into areas where their knowledge is a little hazy, shall we say?
I think understanding is growing for sure. I think ChatGPT did a fantastic job of really helping us appreciate what AI meant. Pre-ChatGPT in November 2023, AI was a bit of a concept that people didn't really, it wasn't real. ChatGPT came in and it made it so real. It's like everybody can go in now and interact with AI. So it's now becoming a lot more mainstream in that regard. But then ChatGPT also helped us to see the harmful side effects of AI, right? Because we've seen a lot of people putting in like secret codes into ChatGPT and releasing secret information, and it's gone in and now it's hard to get out. It's now a black box that's now gone out on the internet. And then also we've seen a lot of deep fakes being created with AI tools. Being election year, this is going to be very interesting to see what the kind of role that AI plays in election and all the deepfakes and things that come up. But then all that said, a lot of people are trying to use AI to help with KYC and RegTech solutions. The challenge with adopting AI right now tends to be what I just mentioned is, to your point earlier, Charles, that it's a black box. We're still trying to figure it out. And a lot of these things we're leveraging third-party tools, and that third party, who knows what they're going to use that information for sometimes. So with RegTech challenges, AI requires data, right? And we're talking earlier that we have to be careful to make sure we feed it with the right data and we don't feed it with biased data, because you're finding like we're using this AI tools to help with KYC. And if in our society today, we're already sidelining or segregating certain demographics, if we're feeding that information into the AI tool, guess what it's going to do? It's going to spit out results that are also biased as well. So you propagate on a large scale more biases.
Yes.
And it makes it even worse because now you can't even explain why there's a bias, because at least before it was a human that made the decision. So you can go back and try and have a rational conversation and try, but you put it into the AI spit out something and you just stamped with that and you're pigeonholed. So the risk of boxing people and boxing certain demographics out is something that we could potentially see if we don't all make sure we're actively involved in training the machines. Making sure the machines are learning the right things is a key thing. But I think also as making sure that you're compliant with regulation, right, is how much of this data can you feed into the machine before you start getting in breach of GDPR. And finally, something I want to say keeps skipping my mind, but if it comes back, the fact that there's a lot of data. So most of this, especially big banks, have centuries of data. But again, for AI to work, you have to feed it with the right data. Most of this data is not digitized. So I think before we can actually see the full adoption of AI, as we like to talk about it, I think we've got some time between when we can actually see the full benefit and where we are right now, because our data still needs to be cleaned up, digitized, and formatted in a way that can then be fed into the systems and the models to process and see our relevant information. So I think those are the three blockers I've talked about, right? So it's regulation, making sure you don't put the wrong thing in and give out your banking your trade secrets without realizing it, bias, and also the fact that our data still requires some cleanup. I think those are the blockers towards it. But in terms of understanding AI as a solution, I think for sure the knowledge, the appreciation of what it can do is definitely much better thanks to ChatGPT.
It sounds though that the pressure, therefore, is more coming from banks wanting to do a good job than the regulator. I sometimes wonder whether banks live in fear of regulators pointlessly, because if an innovation is well thought through, well implemented, generally regulators don't mind. Do you think that people live in slightly pointless fear of regulators? You know, if you work with regulators, we've seen all sorts of creative fintechs come up with amazing new products and services. We've seen, buy now, pay later moving fast. I mentioned Lemonade with its, AI claims processing and insurance in the United States. That really banks ought to be more afraid of doing a bad job than of some abstract fear of regulators. Is that fair?
No, I don't think the fear is unfounded. I mean, was it this week or recently HSBC was fined 57.4 million pounds for not something they did wrong, but something that nothing happened, but they just didn't have the right person in place. So the regulators came in and they checked and they found they didn't have, so nothing had gone wrong, but in theory it could have. So it was a hypothetical issue, but they were still fined that. So those are the kind of, HSBC is big enough that potentially it's not a big deal and it can be absolved and it's not going to crash the bank. But how many of those kind of fines can one theoretically cope with as a big, large institution, right? It's not going to be a slap on the wrist and just move on. Potentially they're going to get a large piece of fine. And it's not just the fine, it's also like reputational cost as well, because then that ends up on the front page of newspapers and the context is not always well communicated to the consumer on the high street. So they just see, oh, this bank constantly keeps getting fines. It's not safe to put your money in this bank. And if you're not careful, then so the impact of it could be quite significant, is my point. With a smaller fintech, of course, they're regulated, but I don't think it's not to the extent, I think, of a larger established bank. I think that's the disparity and the reason for why you find some hesitation to adopt things. But then that said, I find that, I don't know, Nozoma could probably correct me, I find that most big banks are creating smaller spin-off fintechs, right? So they have their legs in fintech pots. So they have the main operation that is very highly regulated and still very conservative in their approach, but they have a smaller fintech spin-off that they will then try experimental.
No, definitely. I definitely think a lot of banks, you're seeing a lot of spin-offs in terms of fintech, but maybe this is the compliance person in me speaking back and pushing back on Charles's maybe comment about conservatism. I think a lot of regulators have done their job over the course of the years, right? The compliance discipline has actually changed quite a bit. It used to be a binary kind of science, it's either you're compliant or you're not. I think a lot of regulators have kind of taken the journey of what the industry is calling a more risk-based approach. So what is the risk materiality? So really understanding, is this material, is this something that a regulator should fine you for, or is it of low probability and therefore, regulators are almost taking the stance of, seeing the gray. So it also gets complicated because then you start to see the different personalities of the regulators, right? How are they leaning into this risk-based approach? And that's different because we operate in different jurisdictions. We are seeing it. You might see something very different in South Africa versus another country. So I do think that the regulators have taken quite a journey and we are at a more competitive point of view, I think, than we were.
That's fascinating. And I wonder if you could just compare jurisdictions, Nomzamo. I mean, your bank is running across 10 different African countries, so you have a pretty good view of this. Is there uniformity? I'm going to speculate here out of sheer ignorance. I wonder whether some jurisdictions are more prepared to let financial organizations be experimental, particularly in the field of AI, because there's an advantage in doing so. You can become the home of innovation. There's certainly an argument that the European Union is inhibiting innovation through not just through GDPR, but through other AI regulation. And it may just be, therefore, that innovation moves to Wild West nations. And that could greatly be Africa's advantage if they're not so uptight as the European Union, which wants to be seen as the leader on regulation. That maybe it'd be great for fintech companies to look at establishing in some African nations first, where the regulators are more flexible. Is that?
So definitely, in terms of what I've seen, I'll reflect on banks quite later. But where there has been quite large adoption, especially for AI, is around markets like your East Africa, Kenya. You're seeing Nigeria also play a lot in there, but you largely see innovation around fintechs and not the regulated entities. I think there's still a pull for regulators to make sure that the larger banks still play quite safe and, I'm going to say, conservative. But what that does, and we were having a conversation earlier, is that you're seeing a lot more fintech players, which push kind of product innovation, which kind of push at kind of the fringes. And they also bring around a lot more people into kind of the ecosystem, which the banking fraternity wasn't able to even catch. So I think there's opportunities on both sides. It also gives the opportunity for banks to even, Yemi was asking me about how banks kind of play with fintechs. That's an area where they can collaborate, right? So whilst the bank is heavily regulated, they can have interest in fintechs who are slightly less regulated and can play in certain spaces.
And just for the sake, because we know the European Union's approach to tech regulation is reasonably well known globally. The United States, of course, everyone's familiar with. But South Africa, is there a philosophy on how to regulate AI in South Africa? Give us the local mood.
So currently, I think there hasn't been anything that's been kind of put through law. There has been kind of hints around our own, what we call papaya, which is regulated by information regulator, which kind of speaks to the regulation of personal data. So they hint towards there in terms of using AI models, but it's really at very infant stage. We heard from our information regulator the other day that there was actually an African summit. And I know that, there's interest in understanding and kind of getting ahead of the issue. But on most things, we're kind of led from more developing kind of countries to see what could go wrong before we kind of make it law within our jurisdictions.
I think that's fascinating. I believe there'd be a great advantage in being a laggard on this. That some of the tech entrepreneurs I talk to believe that the European Union is being overly officious, and the dead hand of bureaucracy could stifle AI. We all know, San Francisco culturally has its difficulties. There are a couple of centers, I don't know, globally that are going to benefit. The FT headline today was Hong Kong is over. So, maybe Johannesburg could be a great place for AI innovators to congregate. I mean, beautiful weather, beautiful wine.
I think so. And I think that even you're seeing some kind of reg techs play in the space as they think about how they kind of use AI for KYC processes as well as your AML processes, how we kind of regulate and kind of oversee financial crime. We're definitely using, in my experience, some AI models there, but they're largely explainable and governable, so and transparent.
Love it. Great. Yemi, I'd just like to ask you, we've got 10 minutes to go, just about your advice for companies implementing innovation programs, because this is your forte, and the sequence they can go in, because at some point people have to bring the regulator on board. I'm wondering what advice you give people, whether you have a formula for innovation. Should people on day one go and talk to a regulator and say, if we do this, what do you think? Or do you tend to think, well, okay, no, it's hard enough building a change program, build it, and then talk to a regulator later? Do you have any practical advice on the sequence that you advise?
Yeah, great question. And just to add to that last point that Nozoma was talking about just now as well, is I think regulators actually have been collaborating with us, fintechs, because there's like great sandbox. And so most jurisdictions have great sandbox environments. So they actually encourage fintechs to come and say, and to your point, Charles, like if you have an innovation, engage us, we'll give you a sandbox, you can practice, try, and we'll work with you to shape the regulation around it. So each jurisdiction does it better than others sometimes, but there is most of them have good sandbox environments for you to try ideas out and innovation. But I think in terms of how to go about disrupting and implementing innovation, I think for me, I have a 7-step framework that I like to encourage people to think about when they're introducing any kind of change, right? For me, I think it starts with awareness of yourself as the innovator. So if you are the one, you're the main change agent in your organization, knowing yourself, first of all, like what are your own strengths, your own weaknesses? What are you great at? What are you not so great at? I think because the more self-grounded and aware of yourself you are, the easier it will be for you to navigate change and know when, because it's going to be difficult of a journey, right? So you need to know when you need to slow down, when you need to push harder. So knowing yourself, I think, is a starting point. Secondly, knowing the organization, right, as well. As like, so what's the current organization's context? Like, because sometimes I find that people, a lot of my people I'm working with, like CEOs and experts, have gone to like very fancy tech conferences. They've heard all this cool, buzzy technology, crypto, Web3, and they coming out of this conferences hyped like, yes, let's go change the world. We're going to implement everything, right? So they've come out of it like really, really buzzed up. But I think it's then important to take a step back and say, wait, given all this cool technology, what makes sense for my organization? What makes sense for the people I have around me? Because I think we also have to remember that technology is a tool. It's not the mill. It's a tool. It's the catalyst to help deliver business. Technology should not become the front stage. That's my concern sometimes with this kind of conversations, is it becomes, oh, AI, we must implement AI. No, does it make sense for the context that you are and the organization that you have, right? So it's being aware of yourself and the organization, step one. Step two, really identifying what problem it is that there is to be solved in your organization and coming up with a clear problem statement and making sure the problem is worth solving or worth pursuing. Step three, then coming up with what the potential solution might be and making sure the solution makes sense is, for me, the step. Then step four is testing the idea first. So this kind of product market fit internally, right? So it's like, so this solution I think I have for this problem, let's test it on a small scale first, right? So at this point, usually you can test it. You may want to involve regulators at this point if it makes sense too, but sometimes it's possible to just kind of check interest. So get a quick landing page out there and see who is interested, who comes up. Because if nobody bites, then there's no need to make a noise or go and get regulators involved or anything, right? So it's test the idea and see if there's some kind of traction or demand for it, so some kind of product market fit. At this point, you can then decide whether or not you want to involve regulators or involve third parties to help frame or shape the idea better. Once you've seen that there is a need for it, then you can then start getting into like, okay, how do I scale it? How do I build a sales funnel around it? How do I get the word out there and build a customer base around it? Then step 6 being how you clean up the automate, because when you're growing really fast and innovating, there's a lot of chaos, right? So it's like, once you've got into a point where it makes sense, how do you clean it up and make sure it's as efficient and as streamlined as it can be? Then step 7 being how do you then either get into new business lines, sell the idea off, merge it with something else. Like, so what's the next step? So next, how do you stay entrepreneurial with that? So that tends to be my 7-step framework that I try to guide people through, right? But it starts, first of all, I think, with awareness, being clear on who you are as the innovation leader and your organizational context. Not so much making sure technology doesn't lead, so making sure the business still is going to sound very weird being a technologist saying this, but I think it's important that whatever you do, the business has to lead. There has to be a clear business case for whatever technology you're looking to introduce. Hopefully that makes sense.
Yeah, it makes intuitive, perfect sense. And I love the kind of project manager approach, really breaking it down into obvious sequences. So you really systematize what could otherwise be a pretty haphazard process. Nomzamo, ABSA, does ABSA have a philosophy on this, a fixed approach to innovation? Or does each department have its own methodology?
I wouldn't quite comment on ABSA's approach, but what I've seen is, as Yemi was talking about, is, for example, within compliance, we are innovating and kind of taking the regulator on board. There are sandboxes, as she mentioned. So I think that kind of the innovation is happening with the regulator, but we also realize that we're operating in a wider ecosystem. So you is going out and kind of innovating and integrating with fintechs, right, that we're in. As it moves, we kind of move and change, and our innovation starts. Awesome.
Okay, and finally, really, I was just wondering about what the industry learns from the tech sector. Yemi, you talked about how people can get a little bit hyped up on stuff like crypto and on stuff, Web3, stuff they've seen at tech conferences. But is this where the pressure is coming from, or the inspiration is coming from, do you think? That the pace of innovation, particularly from Silicon Valley, can excite and maybe overexcite the banking world? And it's a question of learning from those examples, but maybe not following their methodology. Yemi, what do you think? I mean, do you see the way that banks get infected by the over-enthusiasm and libertarian philosophies of Silicon Valley?
I think it's a good thing because it keeps them on their toes. It keeps all of us on our toes, right? This constant change, it means that we all have to keep learning and keep growing, and life stays exciting. So when people say, oh, machines are all going to replace us, I'm like, I don't know about that. Because there's so much to be done. So that excitement is great. But I think it just needs to be tempered with making sure that any technology whatsoever that's been adopted, there's a clear business case. There needs to be a clear understanding of your actual business processes. First, technology would not solve problems if you don't know what the problem is. Like, you need to be, because sometimes I think they almost think it's a magical tool. We'll just implement AI and magically all of the problems will just go away. It doesn't solve the problem if you don't, first of all, define the problem. And then technology can then be customized in a way that would then align to solve the problem accordingly. So I don't think it should be killed off. I'm pro-innovation 100%. I just think as business owners or as business leaders, make sure Silicon Valley doesn't run your business. You're still the business leader. You should run your own business, but have them as advisors, close advisors to help you accelerate what you have going on, not to come help you run it necessarily.
What do you think, Nomzamo? Do you take inspiration from Silicon Valley, or do you think, no, that approach is not going to work in banking? Break things, move fast. You can't break things, can you?
No, I definitely think we take inspiration, and I think that our ecosystem play speaks to it, right? Whereas you find that fintechs can go fast and break things, right? And they're not as heavily regulated. We not so much. We're heavily regulated, but there's a space that we can play. Fintechs know that they can't scale to the levels that we can without our support. So it's about how do we play in this space while still safeguarding kind of the financial ecosystem. And I think there is kind of an interplay between fintechs and banks. And that's what you're kind of seeing. Banks are experimenting with as offshoots, whether it's their own internal kind of corporate ventures, or they're taking on existing fintechs and kind of partnering with them. So I think there is a space to play here. I do think we should be inspired by Silicon Valley. I think the fintechs should be inspired, and banks should support it in whichever manner they can.
Okay, Nomzamo, that's a great place to end. And I do love the idea of Johannesburg becoming an AI hub, because we've seen certain European cities like Lisbon, like Tallinn in Estonia, attracting a huge amount of talent. But Lisbon in particular is a hugely expensive place to live. There are constraints on what people can do there and where you can build. And we love seeing great companies coming out of places like South Africa, true innovators, and showing the world what places like Johannesburg and South Africa can do. And Yemi, thank you so much for joining us as well. I love your 7-step approach to innovation. It just makes perfect sense. And I think there is a way of systematizing innovation. It doesn't have to be haphazard. It doesn't have to be left to sheer creativity and chance. So Nomzamo, Yemi, thank you so much for your insights. I really appreciate it. Thank you.
Thank you.